Hey everybody, hey traders, Chris Paul here, 6:30 p.m. Eastern Time and around 10:30 a.m. in Melbourne, Australia. I'm out here for the week for conference and just doing a little spot check on the markets. We have successfully completed 3 days of trading in the U.S. Here's Monday, Tuesday, and Wednesday. We did notch a couple of all-time highs. Monday reached an all-time high in the S&P, as did the close on Tuesday. Not that we're really celebrating, massive pushes higher. You can take a look here. The previous highs were post-election rally. We came back down for that little correction, came right back up to test the highs again. Limited trading for the rest of the week with the holiday. Thursday, limited, if any, trading. U.S. equity should be closed. Futures market is either closing early or no trading. And then the Forex market will also have limited hours. So crypto may trade. We might not see a lot of activity. Just expect low volume for the rest of this week. And then we'll kick off with December. We should have non-farm payroll next week on Friday. We'll also have another round the week after that with inflation data. That would be the US CPI and PPI as we go into the December 18th rate decision. According to the Fed Watch tool, the rate decision is still expected to be a 25 basis points cut. That's around a 65% probability right now. So yeah, I mean, everything looks in line to see the Fed do what they said they're going to do without a lot of disruption. I was thinking there for a moment that we'd see more of a 50-50 December 18th Fed meeting, but for right now, the probability remains with a small rate cut. So we'll see if that is kind of the final cut. That would be 3 for the year of 2024, September, November, and December 18th. And then we go into 2025 either with a pause. We'll keep an eye on our yields, which is what I continue to watch. So I thought I'd tap in since I'm so far off on the time zone. We have limited trading tomorrow and just do a quick market review for the week. So like I said, notched out a couple of all-time highs here, just barely squeaking out all-time highs in the S&P. We go to the NASDAQ. We still have some catch up. We had that big election rally that got us back to the previous all-time highs. Again, there's some room to the upside, but you can see this indecision. I'm obviously curious, just like everyone else, for the rest of the year. Is there anything that's going to disrupt this train? Are we going to continue to see slightly higher highs and melt-up highs? If so, great. I'll participate there. I will also continue to watch to see any type of downside move, especially with the Fed cutting rates in December. If they're vocal about maybe no cuts going into 2025 and the landscape is changing, then perhaps the market's kind of priced in something where, maybe there's more neutral to, I wouldn't say hawkish Fed, I would just say neutral Fed, where they're going to be data dependent kind of month in, month out. But NASDAQ still has a little bit of room to get back to the highs. If we go to the Dow or the DIA, carved out some fresh all-time highs even through the election. We go to the Russell or the IWM. I have this previous chart alarm here. This was a nice play for the year. Although it was very volatile, the Russell did in fact play the catch-up game, which was expected. So my longs on the IWM have done pretty well, and we did actually hit my target, which was just trying to see if we get to all-time highs. So from this point forward, at least right now, I'm looking at some profit taking and protecting. I do have some ownership around $200 in the IWM, currently sitting up a decent amount. I'm just looking at adding some covered calls at the upside around 240 to 245. If it goes higher, that's fine. I'll still get it called away for decent premium. If it pulls back, then I'll continue to lower my cost basis. But I could expect to see more of a range trade. If we don't make substantial gains to the upside here, let's say we have a high to a low to an equal high. There's major support all the way back here at 170. We have previous resistance right around that $200 mark. So a couple of mindful spots. I mean, if we're going to break and go higher and see the markets continue to go up, I'd like to see the broader market also helping the small caps, where maybe the small caps continue to outperform in the near term over the mid caps and large caps. We go to the volatility index. We are sitting here at 14.11. Not at a point where I would say I want to get long volatility, but as slowed down with all the elevated volatility going into the election, and likely will stay here in some type of absence of any dramatic sell-off that the market may see. We go to the dollar index. Actually, let me check my SVXY position. So I have a handful of puts. I own the shares on SVXY at $40. This is looking pretty good for some gains, trying to get some gap fills around the $55 zone. I kind of loaded up in this position once we had that big end of July, early August sell-off. I started to sell some puts and collect some premium on SVXY. Go to the dollar index. Pretty big reversal here on dollar index, right at the touch of this pocket around 108. And I still think this dollar is potentially range bound. So I had been mentioning for weeks now, it'd be nice to see a pattern. And it looks like with these last 2 to 3 candles to the downside, and a rejection off that pocket level, there is enough to look at a swing opportunity here where we have a reversal pattern. See if we can look at a swing trade where I could put a stop loss above this area and look for the dollar to come back and correct. And we'll just say that this is going to be resistance that the market is finding. We're going to see if there's some follow through there on the dollar. Now, again, going into 2025 or even to the end of this year, it will depend on the overall narrative from these central banks. If we have the Fed looking to pause rates while we see other central banks still looking to cut rates, that might give the dollar some additional runs. We might see this come back and test this pocket high, 10800 to I said 109 area, 109.50 even, if we get a little bit of noise up here. But I would look for this to be a decent high to play on dollar index. And I'm sure there's been traders that have been waiting now for, a month plus, where we saw this big rip on the dollar. I know a lot of traders are trying to short the dollar in here around 106, 106.50, and trying to short up here around 107 to 107.50. It did eventually turn. You just need some confirmation. And like I said, the last couple of days, we finally had a decent enough sell-off, took out some structure. Let's see if this ends up being a nice little topping formation on the dollar. Take a look at oil. It's still just very supported right around the $66 to $67 zone. Be mindful of the break of that floor. If it does, we're probably dropping quickly. If we stay somewhat elevated, oil is just very, very choppy, very quiet, and very tight. I mean, $67 to even $70 has been this range that's kind of find its way really since early September into now. I mean, we have 2 strong months of very tight range trading. So what does that mean? I don't know. Either continue to watch oil do next to nothing, or we eventually get a squeeze trade where this floor either breaks to the downside or these lower highs, especially this tighter area, perhaps these, let me delete this, or these lower highs end up giving us a kind of a bear trap and reversal pattern. Then oil gets back up into the $80 zone. So it's still a bit of a mystery on what oil ultimately wants to do. But for inflation purposes, I'm sure the U.S. is producing hot and heavy to keep oil prices down, keep energy prices down. Gas at the pump prices are low. These are going to keep inflation data points, I'd say, favorable and preferred in the U.S. to make sure that we don't see this higher tick up in inflation like we're potentially seeing here the last couple of months since we bottomed out in September. Take a look at gold. Gold trading 26.36. Still looking for some pullback zones, kind of a 50-50 zone, whether gold is going to continue to go higher. I think I've been reading there's some ceasefires going on, and therefore I would expect the, geopolitical escalations to be muted, and therefore gold is probably just going to go sideways. I could see on the bigger trend, high, low, lower high to lower low against this larger trend. I didn't draw that very well, but you get the idea. So big bullish trend, a little A, B, C, D correction. I'd like to get some gold somewhat built in around this like 25, 24 zone. Any type of pullbacks deeper than that, I'm still looking to add more to it. I just want to trade that with defined risk. So if I'm trading, GC for futures or GLD for the ETF shares, I will likely do that with a decent time horizon, probably going out, 6 to 12 months, if not longer, and trading a lot of options in those areas. So I think gold is probably just going to settle in. We've got a decent high to low. Let's see if it goes sideways now. If all of a sudden we break and go to all-time highs again, I think that's a lot to be just contributing to central banks are keeping gold prices bid. We'll see what the dollar does in response to what gold prices are doing. If the dollar is getting weaker, maybe gold is going to elevate higher. So something to watch. I will still continue to add on any type of dynamic support. Like I said, I really like this 25 to 2400 zone on gold. Same thing on silver. Silver, pretty well supported. Hopefully we're not making a way back down towards 26. I'd like to see it kind of hang in here with higher lows. And if we can accumulate in this zone, I'd still like to see a measured move hit around $35 to $36. We go to Bitcoin. We had a decent pullback. I'm just going to make this slight adjustment here. Let's go slight adjustment. There we go. So slight adjustment on my swing. Pulled back about 23%. Possibly the same thing. High, low, lower high, lower low. I wouldn't mind seeing a pullback, sub 90, even into the $80 or $80,000 zone. That would give us a decent check. Otherwise, I see a lot of inefficiencies here on this Bitcoin rally. I think we were just officially shy. I think the Bitcoin futures market tapped at 100,000. According to this price feed, I'm looking at the high 99s. So we're very close. Once we get to 100, is it mission accomplished and we see a big correction, or is it just more of the same? Inflows continue to trickle in, not trickle in, I'd say pour in really, into Bitcoin and the IBIT ETFs and even FBTCs. All these major SEC approved ETFs have seen a tremendous amount of inflow that have done it at a fraction of the speed that what we see with like gold. I mean, gold took like 8 years or so to get to the current market cap that we're seeing on IBIT or Bitcoin rather at $1.9 trillion and still growing. So there's exciting stuff in the space. I mean, let's say that market cap gets to $10 trillion. Well, if spot price follows that, I mean, do we have a 5x in market cap? And if so, do we have a 5x in price? Sure. Do we go higher than that? Then there's potential multiples and what could be considered fair value on Bitcoin. So the more and more that we see, accumulation zones and big trends, great. It's an exciting time. I'm hoping that this ultimately becomes a really nice catch-up trade for a lot of investors out there with the gains that are just substantial. I mean, Bitcoin's performed well over 100% average, even with these massive pullbacks we've seen over the last 10 to 15 years. It's still annualized over 100% gains a year, which is untouchable really. So that being said, there's a lot of interest. Now there's ways to play it. You can have your typical, crypto stuff. You can have your wallets and your ledgers, or you can play even in the stocks and options game. A lot of financial advisors are coming out saying to their clients that we're going to add, 1% exposure in Bitcoin, and here's how we're going to do it. I myself, with some of my managed accounts, same type of thing. I trade these peripherals, so I have BITO, IBIT, FBTC. Also, some of these, I have MicroStrategy, which has been just all over the place. But interesting article I read, just basically looking to see the comparison of spot price of Bitcoin to the spot price of MicroStrategy and whether or not it's undervalued or overvalued. And over the course of time, yes, it's more volatile, but it ends up settling right around where it's supposed to be. So I thought that was pretty interesting. I'll continue to watch and see, if MicroStrategy leads the way or if there's any chance that Bitcoin, holds value. MicroStrategy might get a little bit undervalued and dip. And then, of course, just be careful. I mean, there's no guarantee that MicroStrategy is going to continue to trade just like Bitcoin, but it has been and actually has been leading the way a little bit where the market is, I don't know, I think after that 10-to-1 split, that was a big deal. So curious to see if, we get to 100,000+ on Bitcoin. Do we see another big rip on MicroStrategy? Coinbase, same thing, really nice run post-election all the way back up towards these recent highs back in this actually would have been, there's no way. This would have been back in 2021. Yeah. So with Coinbase, having this move in 2021, bear market in late 2021 with tech into 2022 looks a lot like Bitcoin did and starting to show more and more correlation, which I'm kind of happy with. We go to Ethereum. Spot Ethereum is back up near, not quite there yet. All-time highs are all the way up towards 4,800. So there's still some gain potential on Ethereum. We look like we're in a pretty healthy bull trend. If anybody's participating in this move, I'm trading EETH for some shares that I own, as well as some option trades. Some of my big levels, I needed to stay above $60 for my option trades by the end of the year. That's looking pretty promising. And then owning some shares in this accumulation in the mid 50s, doing pretty well share by share. And hopefully we see this thing ripping up here towards 90+. Going into copper. Copper still a little quiet. I attribute that downturn a lot to China. Let's go into some of the Mag 7s. Here's Apple trading at 234. I bought some shares of Apple. I've got a little income play here towards the middle of December. If I get it called away, I'll make $1.65 per share on Apple. So I'll keep an eye on that one for a couple hundred shares. Amazon, still own some shares with covered calls at 210. I have this out to the end of January. Out to Google, I've got some credit spreads on this one and debit spreads. Google is hanging out around 170, looking to see if we end up melting up towards recent highs at 182 or all-time highs back around 192. Meta, still off the all-time highs. Microsoft, very stable in here, actually quite quiet. If we have some dips back into the low 400s, I'll probably establish a few more option positions on Microsoft. Netflix, hanging out at these all-time highs. I'm looking for any type of pullback on Netflix. If I can get one, I might also just start small and buy some fractional shares and just allocate a dollar amount to it. NVIDIA, I have some credit spreads on NVIDIA. I had mentioned this for the last couple of months. We stretched 400+ bars on my daily 200 moving average, And I think we're in a bit of a reversion zone on NVIDIA here. So the 200 EMA is catching up. And even if we go sideways or slowly go sideways, I don't think NVIDIA is necessarily going to higher highs until we touch this 144 or we touch this 200 moving average. So for me, I'm just hanging out with you with some debit spreads and credit spreads. If we come back down and test the 200 in a bit more of a corrective fashion, let's say we just come quickly down to 120 or 115, I'm looking to get long on NVIDIA and kind of stay longer going into 2025. We'll see if we hit all-time highs by the end of the year. If so, debit spreads, credit spreads look pretty good. I'm also at this price willing to take some ownership. The premiums are still pretty rich, and that's a good thing. So I could lower the cost basis very aggressively on a stock that even for a Mag 7 stock doesn't cost me an arm and a leg. I mean, if you look at this, because of that split, NVIDIA at only $135 compared to, I mean, Microsoft over $400, Meta's nearly $600, Netflix is almost up to $900 a share. And Tesla had a huge run, from the low 200s into the 300 pluses. So, I mean, NVIDIA right now is not super expensive, and I wouldn't mind taking some shares, owning it, and seeing if I can flip it for some income. So let's see what happens there. Tesla 332. Probably some indecision post-election. We had that big inefficiency. I wouldn't mind seeing it settle back into the low 300s. Anything in the, let's say, 300 to 275 zone, probably adding some additional exposure. Let's take a look at 10-year yields. We've come down a decent amount. We're at 4.26 off the recent highs, around 25 basis points lower. This is a big deal to continue to watch. Inflation information keeps dripping in. The markets, at least the yields, have been showing that inflation is, looking to be higher in the U.S. And the 10-year yield, which ultimately is going to affect your mortgage rates and your borrowing costs and any type of debt refinancing, restructuring. I think the U.S. 10-year needs to continue to fall if we're going to see the strength of consumer and strength of business moving into 2025. If we see this making higher highs above 4.5 again, creeping up towards 4.9 or 5%, I think that's going to put basically a chokehold on growth and really be tough in the equities market. So a lower 10-year yield is a good thing. I think that gives the markets room to continue to run, and we also need to see supportive data coming out of the U.S. with better inflation numbers. Alrighty. So if the yields are going to be dipping a little bit, we should see the bonds starting to stabilize. Our mortgages have gone basically sideways after that kind of counterintuitive move where the Fed cut rates and started to cut rates, and yet we're up 80 basis points, about 70 basis points off those lows. Which is, like I said, not what the market, or I should say what investors were expecting to see, but that is the difference between what investors are expecting by the Fed rate and what actually constitutes as your borrowing cost, which is your US 10-year. And that's what I've been watching the closest here the last couple of months. Going into some Forex market, I'll get there in just a moment. I want to take a look at China for a second. So HSI, that's the Hang Seng up 2.32, Alibaba's up, Baidu, FXI up, KWeb, JD all up. I do have an income play here on JD. I think my covered call is at 37, and I'll keep a close eye on that one. That's a nice gap higher. I might do some rolling here. If I'm actually in the money on my covered call, it looks to get called away. That would still make me about $600 per account, which is fine. I've lowered my cost basis from nearly $44 down to 30, I think 37, 36 and change. So I did that over the course of about 4 weeks. Which isn't bad considering I saved myself about $5 or $6. Now, I'm trying to get it called away for a decent income. Ideally, I kind of like to shoot for some of those $500 to $1,000 price targets if the stock was going to get called away. So I'm going to keep a close eye on this one and just watch China in general and see how that affects something like the Aussie dollar. And let's go to some currencies right now. So dollar index we did. Let's just do a quick spot check on currencies. I like this Aussie CAD position to move north, so I'm looking for some support there. Let's go to Aussie dollar. Aussie dollar. I do have some pending orders on the Aussie dollar at these major support levels. So it goes back to 2023, back into August, comes back into these lows back into October 2022. So it's not going to be the easiest to pick a bottom here, but I think we're close enough that if we have a little bit of a dip or retest of these levels, I wouldn't mind a 64 and a 63 and a 62. Just pick up some buy levels on the Aussie dollar and looking to see if that dollar index will ultimately fade. Let's go to some Swiss pairs. Aussie Swiss, I still like holding long, generating some positive swap. CAD Swiss, same thing. We came right back up to that 200 moving average on the daily at 64. I'm looking to hold this up towards a measure move around 65. But the kind of the longer term trader in me wants to hold this back up to around 67, and then a big pocket fill back around 71. There's more than enough time on this CAD Swiss to see some type of bottoming pattern. Whether or not we come all the way back down to this level, let's say this is wave 1, wave 3, pull back here, wave 5. If we hit this area, lots of support in here, that could be a nice profit target in the short term. If we come all the way back down for whatever reason to test this low and we hold that low, then I look for a double bottom, measure that move, and then project it up here towards around 67. So I will still hold, and if we get some positive swap, which I have it, that's fine. I'm going to hang on to it for right now and still be long on CAD Swiss overall for more of a position trade. Yen crosses, not doing a lot with it. The dollar's been getting weaker, so the dollar yen has dropped a decent amount. I'm sure there are some traders actively looking to short it. I just said look for smaller confirmation time frames, and so we started to roll over here after making lows and higher lows and higher lows. We finally rolled over and maybe offering some short-term trading. I still would, wishful thinking, love to see us sell trade around 160 to 162. If we get there, great. If we actually have a price pattern in here, there could be a swing trade, bit of a topping pattern. So maybe a swing opportunity on dollar yen, stop loss above the swing high, and look to see if this actually rolls over into some type of high, low. I don't know if we're going to break these lows, though. I could see this market, high to low, establishing a range high and a range low, and then this is just going to be a lot of chop. So I still just be careful on the yen crosses. If we get a chance to sell it nice and high, obviously I like the setup with confirmation. If we get to buy it nice and low, just having a nice defined risk trade. The rest of it to me is just a bunch of chop, potential chop. So just be careful on those crosses. Let's go euro dollar. Euro dollar is going to be the inverse of your dollar index. So we're starting to pivot nicely off those lows. A little bit more upside would be great. If this becomes a reversal pattern, we came all the way back down towards 103. That level's around 103.30. And keep a close eye on that. There's some strong support going back a few years now. This goes back to 2022. And clearly, ran some lows, reversing back above. We're now well above this 105, 105.50 zone, which I think is a good way to close. And I'm sure there's some traders that are feeling some pain on the euro dollar with the dollar index running as hot as it did for a while. But man, from this 112 zone all the way back down towards 105, we had a bit of a PMI flash around 103.40. But all that looked like to me is we just ran some levels, found some structure and support right around this 104.50 handle. And if we get a reversal pattern, I think we settle back into maybe the 108s, 109s once again. See what the dollar ultimately ends up doing. Pound crosses, let's go pound US dollar. I did take a buy position off the pound. You can see it right there. I bought it off this just kind of manual trend line that I drew from this low back in March of 2023. So higher time frame, small buy position off the 200 moving average. Bought another one right here around this 25.50 to 25.75 zone. Not looking for a ton on this one, but if we get back to, let's say, 1.30, probably end up taking some profit there on the pound dollar. Take a look at the New Zealand dollar. Got a couple buy positions in here as well. Aussie dollar, New Zealand dollar to me, pretty similar. Just looking to play the lows. So if the structure holds, I have 3 entries on the Kiwi dollar and looking to just trade the range. So if we hold support, get back in the middle, 6,100 looks good to me. 6,150 is great. Returning all the way to the highs might be a tall order. I think if China really shows a lot of gains going into 2025, then the Kiwi dollar and the Aussie dollar benefit from that. And that will be a really interesting run on the technicals for the Forex side of things. So if China is good, then look for those correlated currencies like the New Zealand, like the Aussie to also benefit from that. So that's a big part of it. Dollar CAD, lost my mouse. Dollar CAD is at 40.27. We spiked all the way up here towards 4,200. I mean, I still like this measure move on the dollar CAD. I'm still long. I got filled here at 41.50, so I need to update this on my chart. This is a 41.50 fill. So I do expect it to continue to be pretty volatile. I'm not necessarily thinking we're making a big reversal here. We're in open space. I mean, really. So look left into the 2016 highs, back into the 2020 highs. We're well above these previous resistance points back in 2022 and 2023. I'm just looking to see if this stays the course with higher lows. Higher low, higher low, higher low. Even if this is the channel, and we have some chop in here. As long as we stay above, I'd say 37 to 3,800, I'm still looking to stay long on the dollar CAD. I'd like to get this back up towards 44 to 4,500 before I take some profit, and I'll continue just to work some small positions in areas on dollar CAD. I'm still long on dollar Swiss, enjoying some positive swap, and we're trading at 88.30, 88.20 or so. I'm trying to get this back up to 92. There's still a big pocket fill that I've measured up to 96 to 9,800, but with all the positions I've been building since late 2022, early 2023, this to me is a nice profitable zone around 9,200. So that should about wrap it up. Kind of a stock overview, where we're at with the indexes, gold, silver, Bitcoin, the dollar, currencies. And for the rest of the week, not expecting a lot of activity with the U.S. holiday. So that's going to do it. And like I said, time zone is a little wild and crazy out here in Melbourne for me. So I should be back in the office and officially back to the trading desk next week on the 2nd and 3rd of December. So happy trading, lots of profits, and we'll talk to you all soon. Thanks, everybody. Bye.